Good morning, everybody. Please take your seats. Thank you. My name's Thomas Hare. I'm the Chief Content Officer of the PDMI. Welcome back for our second full day of education here at the show at pdmiwest. We're thrilled to have you here. Great to see you bright and early. I know a lot of folks were out late last night, so it's good to see the true warriors out here getting back up and joining us, so we appreciate that. We have a great panel today. We, as always, thank the hotel, the Hard Rock Hotel San Diego, for all their hospitality and their help putting together this show. Thank all of our attendees, our badged attendees, our members, our sponsors, and most particularly our education sponsor, which is Pacific Media Technologies. Patrick Booker from PMT here to say just a couple of words of welcome. Thank you, Patrick.
Well, good morning and welcome to day 2 of PDMI West. We had a great first day packed with educational sessions that covered a range of key industry topics that were highly insightful and informative. And we'd like to personally thank all of the speakers, the moderators, and the panel members for their contribution in yesterday's program. We're looking forward to much of the same today, starting with our first session featuring discussion amongst the leaders from each of the agencies. And discussing and sharing insights on the challenges that they face in the direct-to-consumer marketing business. So on behalf of Pacific Media Technologies, we want to welcome you and thank you for your participation and your support in the PDMI. Thanks.
Thanks, Patrick. And PMT has a quick video they'd like to share as well.
We trust PMT because we know they're professionals. We've been working with PMT for over 20 years.
They're the most customer-friendly, they're the most timely, the most accurate.
They are really wonderful with their technology and the advancements of their technologies that they implement.
They treat us like we're the only client that they have.
Whatever we need, we know it's going to get done. So that's really important to us, that personal connection.
Pacific Media Technologies. Technology-driven, quality guaranteed.
So thanks again, PMT. As Patrick said, we're here to welcome a great group of agency leaders led by our moderator, Daniel Rodic of Agora Brands. We've got Mike Lyons, who's the President and Chief Investment Officer of Juice Media. We've got Amie Smith, who's the Executive Media Director at TCA. And we have Vicky Chang, Senior Director of Media at Tatari. So welcome all of you, and take it away. Thank you so much.
Hopefully you get thumbs up. My mic is on. Great. Tech is out of the way. So thank you all for joining us today in the panel. Thank you all for attending our first session this morning. You got a brief introduction from the interest here, but I'd love if we could just go a step deeper and we can kind of go from my side to the end of just tell us a little bit more about what your company does and maybe a highlight from the past couple of days, and then we'll get going from there.
Yeah, so Mike Lyons, Juice Media. Juice Media is part of 2NIL Media Group. So it is both a strategy and media activation agency that works primarily with direct-to-consumer customers. I mean, that is not really our design, but that tends to be our customer base. And yeah, we're happy to be here at PDMI. It's been a great couple days. It was really nice to actually get personal interactions back on the agenda. Mm-hmm. And meeting with both, our clients and vendors here has been really a refreshing experience.
Amazing. Yeah, I was actually here with a couple of brave folks from last year, so it's good to see a much more engaged and lively room this year. But how about you, Amie?
Hi. So Amie Smith. I'm with TCA. We are a Omnicom company underneath the Omnicom Media Group umbrella of agencies. We are a full service agency with television, creative analytics, and specializing in data-driven solutions for performance marketing. And I would say it's been great to be here as well. Kind of hiatus over the last couple of years as an agency for attendance, just reconnecting and, seeing networks and publishers and our ad tech partners.
Vicky?
Hi, everyone. Well, thanks for coming so early on a Wednesday on the last day of the conference. My name is Vicky. I'm the Senior Director of Media at Tatari. And Tatari, we're a data and analytics company, and we measure outcomes on linear and streaming TV. We have a dashboard that people can log into, brands, agencies, publishers, where they can log in and see real-time results across linear and streaming television.
Amazing. So I want to start with that, so you can see we have a very good group of experts here to guide us through our discussion. And just for context on who I am, I'm with Agora Brands. We invest in primarily direct-to-consumer brands, so you can think of me in terms of the brand side and the investing side. And really the discussion I'd love to guide everyone through today is there's lots of glum, grim, whatever acronym you want to use, news about how the economy is doing, what's happening with marketing spend, which naturally will affect the businesses of a lot of our clients, and then indirectly our businesses. So we'll go through some topics through there. As we go, I'll start opening up the discussion for Q&A. So you see someone running around with a mic, make them to come with you to the mic to ask your question, and I really want to make this session as valuable for you as possible. So it's only as good as the effort you put into it. So if you have great questions, I really would love for you to ask so we can go through as many of those as we possibly can. So with that said, the first question I have is, and let's just start a little bit more high level of what you're seeing in the industry. We'll kind of go in the same order, and then we'll mix it up. Have you seen any change in working media dollar spend in general? And sub to that, are you seeing movement more into TV or less? Like, what's been the general view from your side?
Yeah, that's a great question. I mean, where we are is, we did see a slowdown in third quarter from most of our advertising base. I think, people were being cautious with their spends, wanted to, make sure that they were delivering the ROAS that they needed, to continue to grow these brands. I think everyone, at the table here is, highly outcome driven. Mm-hmm. So I think you're probably going to hear a similar answer. And then as far as media spend goes, I mean, what we've seen is, has just accelerated from, pre-pandemic to now, where there is a general shift from linear TV into, connected TV, OTT space. It's driven by the consumer, right? The consumer wants to consume content in a very different way. And I think as marketers, we're following that trend. The thing that's exciting, without taking too much, is like, to us, that allows us to do, all the things that we can do in digital media, on the big screen. So it's an amazing opportunity. And then on the linear side, just to touch on that, I mean, it's also an opportunity because, as ratings have adjusted and, they're smaller, the cost of linear media is more palatable. For these advertisers who have, not been able to scale or afraid to scale into TV. Unit costs are lower. So, we find a greater appetite for that media right now. And, personally, I think that, using all media is where you really get the best outcomes, and it's just, figuring out the appropriate mix.
Yeah, that's great. And maybe, Amy, same question, but I'd love to go a step deeper of, if media spend is down, is there anything that is particularly like going in the opposite direction and actually doubling down and aggressively spending more?
Yeah, absolutely. So, it has been a soft market. I think we've all have kind of experienced that. I would say one thing that we've experienced is we have grabbed share of voice spend from some digital executions from our advertisers. And part of that being, some of the click exchanges. They haven't seen the efficiencies that they'd seen in the past. And, knowing with linear television, one medium there, that the trustworthiness to a consumer is really strong. And so the value to a consumer or for an advertiser based on a lead has been stronger from the television, the linear space, that we've been able to grab and reinvest for our clients there.
And is there any, I come from the direct-to-consumer world, and if you're a direct-to-consumer brand right now, it's 95% of you are not doing too hot. In the other categories that I know you service, is there anything that seems like it's actually thriving or holding steady?
Yeah, absolutely. So a couple of categories that we've experienced that are consistent and growing are the mobile and video gaming segments. That's been a business that's done very well. Pharma's been up.
Yeah.
I think we've all kind of experienced that.
And you're more of an opinion. Do you have a sense of what do you think is driving the growth of that? Where gaming, entertainment, but it could be also viewed as like an unnecessary expense. Like, what's the? Is there a particular opinion you have of why that seems to be doing better?
Yeah, absolutely. I think as consumers are being more sensitive to the spending of their dollars, areas where they can spend for some lower cost entertainment with some in-game placements, spending within the video or mobile gaming, that's something that they can do, and that's entertainment that they can have. It's not a big ticket cost that really comes out of their overall and disposable income, and I think that helps.
Yeah, that's great. How about you, Vicky?
I think we've seen similar things starting in third quarter of this year. We did see some dips, but I think it really depended on the category. And at Tatari, our clients are a really high percentage direct-to-consumer, so I think it might be a little bit different than what the rest of the marketplace as a whole might be seeing. I know there was, bigger dips in like auto or CPG clients, really large brands, reducing some of the spend. I would say overall, our spend is relatively stable, but where that spend is going and what categories it's in is kind of what's changing. Some categories have stayed very stable, like fintech, health RX, and then we're seeing a little bit of a slight dip in home improvement or subscription services, but I think as a whole it's actually remained relatively stable. What I think we have seen, which is interesting, is a lot of incremental spend that we saw in 2020 and 2021. There was a lot of incremental spend coming from Facebook or Instagram because brands started seeing a lot of diminishing returns, and so they were shifting those dollars into TV because TV has become so much more accessible. You're able to bid on it, you're able to get data on it, so it was really easy for them to shift those dollars into TV. So now what we're kind of seeing is that it's a little bit harder for them to do that, so they're keeping those dollars a little bit closer to the chest or just a little bit more conservative, but those are kind of the dollars that we're seeing shift a little bit.
And I mean, segueing to the other topic I wanted to get to is this, you had mentioned this movement from linear to streaming. Before we get to that in particular, I'm wondering, as you're now working closer with your clients, is there anything that's either you have been pushing or you've seen clients push you on changing their media buying strategy in terms of how they plan their buys, or are they looking at streaming versus linear? Like what if anything has changed in the last couple of months?
Yeah, it depends obviously on every brand, but because in our dashboard you can see both either linear or streaming and all at the same time, and you can compare it, kind of apples to apples. It really depends because sometimes, I think in the beginning and probably now as well, linear CPMs have come down a lot, probably at a faster pace than streaming has. So a lot of our clients have shifted kind of back and forth between linear and streaming. There's also clients that maybe hadn't tested into streaming or hadn't run streaming before, but there's a lot of scale and opportunities now on CTV, and they might be adding that to their mix. So it's really a back and forth kind of thing.
Yeah. Well, and as the data point, which I guess a bit newer news in July, I'm sure a lot of you saw the first time streaming ever exceeded linear in terms of share of TV, and then in last month's Nielsen's report, that continued to set another record. I think it was about 36 or almost 37% of all TV is now streaming, and now you're starting to see growth in, we'll see what happens with Netflix and their new ad-supported channel, and that's going to just open up more inventory from a media buying perspective. And so it seems pretty consistent across the board that linear CPMs are declining. Are you seeing a resulting change, and this is an open question for anyone, a resulting change in ROAS as well? Like, is the same creative now performing better because CPMs have dropped, or is there like still an efficiency drag on TV as it is elsewhere?
It's kind of interesting because we have been looking a lot at response rates. So response rates have kind of dipped a little bit, and we saw something very similar when the pandemic first hit.
Yeah.
During that time period overall, the response rates did dip a little bit, but as CPMs and the market came down, the CPMs were actually more efficient. So net clients were still able to, get better performance, and they were still able to stay on the air. And a lot of clients that were able to do that actually gained market share. Kind of what Amie was saying. If you're able to advertise and still have it pay out, you can gain, market share.
Yeah. How about you, Mike? You had brought up the CPM part at the beginning.
Yeah, I agree with what Vicky is saying. We did see a similar dip in response rates. What has helped us mitigate that has been the ability to kind of two things. One is not silo the media, right? So when we're as I know Tatari has dashboards, we all have dashboards. Looking at performance across media channels and being able to be nimble and make switches in relative real time. Where most people had thought of TV and not this group, was a set it and forget it type of strategy. Like here's what we're going to do for the quarter. With all the data that we can look at now, we can make changes much more quickly. And you brought up creative, right? So having a creative strategy that matches the media strategy has been really important. And even not creating brand new concepts, but just variations on existing concepts has really helped us eke out incremental. Marginal differences that matter at the end of a quarter, and now's the time when people are really looking at that.
Yeah. Maybe to build on that actually, because you had brought up this kind of softening of response rates, and so we had a discussion about this as well on creative too. Of have you seen maybe two ways to think about it in terms of like linear versus streaming? Is there anything I should be thinking of, or anything that you've been guiding your clients to think of how to execute differently on either? In terms of how people consume it, and then more tactically in an environment where you're seeing response rates fall, is there anything you've seen in terms of how people should change their CTAs or how they tactically run this campaign to reverse that?
Right. So I think, really, what we're looking to do is obviously bring that ROAS down. So, pricing is a piece of that. And as the market is changing, we're all working on that. So integrating with our clients on first-party data, really having that measurement and that trackability for both a linear campaign and a streaming campaign, and having that holistic view and being transformative with our clients and our advertisers as opposed to transactional is really what's getting us, better returns for the overall ad investment that's being spent. With that, we're all working with the ad tech. We're all looking at the dashboards and being very nimble in making those movements. So during this time period, what we really see is, the savings, the discounts, those really speak to consumers right now. So when you're able to have those elements, with your creative or have those offers in the market, we do see stronger response rates that come back, when you are able to offer that as a part of your direct to consumer campaign.
Mm-hmm. Mm-hmm. How about yourself with your clients, Michael?
Yeah, no, that's definitely, I think offer does play into it. I think it's, it's keeping it fresh and making sure that you're tracking things. I don't think you need to, reinvent creative, but as you mentioned, end cards, not in a bad way, but a modular approach to creative is very effective for performance advertisers.
Yeah.
And we had mentioned Khan before. I'm sure that group wouldn't want to hear that.
Yeah.
But for people who rely on ROAS and performance, understanding how the creative performs and being able to make adjustments to that is really crucial to their business. And if the creative agencies that we work with, when they start thinking about it, actually offers them a unique opportunity to produce more content. Similar to the way people do on Facebook and other channels. So I think we're looking at a world where creative needs to be done quicker. We need to react to changes that we're seeing and switch things up and learn in real time.
Yeah. And we'll keep on this topic, but if people have questions, please raise your hand, and I think we can start grabbing questions in a few minutes. So just on this topic on creative, I wanted to get your perspective on how to actually do that, because I think on Facebook, on traditional social, it seems a bit easier. I can do a short video shoot, doesn't have to be super high production value, but TV is very different on the surface. and maybe we can start with you and get the perspective from the room. What operationally, how many pieces of creative do you feel like brands need, and how often do they need to refresh? And then what have you seen are ways to do that in like a cost-effective way?
Well, I think the pandemic taught us how to be how to work in post,
Yeah.
right? So that was something that we all had to figure out, and we couldn't get live productions done in the beginning.
Yeah.
So it became imperative. How do we refresh these creatives, and how do we make them more effective? So I'd say our post-production strategies are much more advanced than they were 2 years ago.
Yeah.
And that is a really efficient way to refresh creative, give it a different look. We look at reels of content, and when going into a shoot, and not to make this a complete creative discussion, but having enough content when we're finished to, over the course of the next quarter, to produce 3 to 4 different pieces of content from one shoot. And that makes a big difference for a client's budget.
Very cool. How about Vicky at Tatari with your clients? So do you see any best performing in terms of like number of creatives you're running side by side?
I think, for us, like I said, we have a pretty broad category of clients, and I think even though it's kind of a softening of the market, and we're seeing economic challenges, a lot of the best practices that our clients use are still remain in place, and that is having your brand or company name within 3 seconds of the commercial, having a really simplified message, having simple product shots, and also having variation kind of, like Mike was talking about, having variation in spot length between 15s and 30s, having, possibly a concept, more product shot type of creative with a testimonial, and then also like a brand one. So having those 3 and kind of being able to switch back and forth between them. And like I said, the spot length 15 versus 30s, because it can be different depending on whether you're running it on linear or running it on CTV or OTT, because of the cost and probably the targeting that you're running on CTV. So just having that variation available. And I think something that people probably find surprising as well is that an offer doesn't always drive the best results, right? So I think that's something for people to consider, especially if they feel like they need to do an offer or something in the economic recession. It doesn't always perform the best.
Yeah, makes sense. Amie?
Yeah, I would say too that human connectivity is huge with the creative. So when you can have a spokesperson or an actor, or even 2 people talking with to each other, that really resonates with the consumer, as opposed to a voiceover or animated characters within the creative. Right now, during these times, I think that human element always really speaks to a consumer to really get their attention. And then within the messaging, you're really asking what is it you want them to do with your brand, and making sure that that's clear. And if many of our clients are new to the market, so making sure that the creative itself precisely explains what is your product, what is your service, within the length of time, to really get them to have that call to action that you ask them to do.
Great. I saw a bunch of hands shoot up. We need a question. We have one back there. Let's start with that.
Hi there. Just wanted to go back to some of the comments on the current spending environment. Google reported their Q3 earnings yesterday, and I think they shocked a lot of people. Slowest rate of paid search in more than a decade. Missed expectations for both search and YouTube, which I think are pretty resilient corners of the ad market. So curious how that informs you, or if that foreshadows additional incremental weakness in the market going forward, given that that was actually a backward look at Q3, which was relatively stable, I think you guys had said. Thanks.
Great. Yeah, maybe we can start. Maybe Vicky will start here and we'll come back this way.
Yeah, I think it's the same. Like I said, it's just that a lot of the advertisers now, because of the marketplace and a lot of available inventory, it's just that they have more to choose from, right? So I think they are testing things like TikTok or, like I said, CTV and other areas. So I think it's just more about where they're putting their dollars, and if they have a high level of confidence that it's going to work. you know, we're having more conversations where I think it's just taking a little bit more for the client to want to test it or put the money into it. They just want more confidence than maybe, you know, last year.
You know, I would add too, I'd say, you know, there's diminishing returns that are happening, you know, within the social space. You know, many of the clients that we have are digital natives. They come to us, they need larger growth, larger scale. They're turning to, you know, television, linear, and a connected TV, OTT blend. And really with that, you know, we are seeing that they're looking at the overall consumption of a viewer, you know, within media tactics and realigning there. But we are seeing that there are, you know, there is some of that pullback in social media that is going into some of the linear space right now. And again, like I mentioned before, that trustworthiness and that lead value that is coming to campaigns from, you know, the video on, you know, a larger screen like a television really does bring value to the campaigns.
Yeah, I think that's all accurate. And, you know, I think this adds like the validity access, what Amie was talking about on TV validates a brand. You know, there was a segment this morning on GMA about people hijacking, you know, Tom Cruise and Elon Musk and doing fake ads with them. You know, we don't have that issue on the large screen. So, you know, as that proliferates the marketplace, it makes TV a stronger medium. Yeah. And the part two of that is, you know, I think it's giving at least the advertisers that we work with some pause on the walled garden approach to measurement, and they appreciate transparency. And as we're able to offer them more transparency into who we're reaching, how it's working, they only feel more confident. Yeah, understood that the marketplace is changing, and you know, the economy is a bit different than it was a year ago. But I think, you know, there still is the effect that television has for an advertiser that really no other medium had.
Yeah, totally.
And Mike, would you say too, like with the growing of the fast channels, you know, there's more demos coming into the streaming space, right? So you have linear-like programming on these channels that are free and ad-supported, and you're bringing in some of that older audience, and I think, you know, that too is helping the consumption overall.
I would definitely agree with that. I think the assumption that you know, OTT and you know, CTV is a younger person's medium, it has dissolved over time, and you know, most of the growth is coming from that older demographic, and that older demographic normally has cash and you know, and they spend, and you know, that's why when someone on the panel mentioned healthcare, like you know, that's a bellwether. You know, we're in that time of year where that's an important consideration for people. So you're going to have those categories that, you know, are really evergreen, but you know, we will lose some of the you know, some of the categories that have been great over the past year.
Yeah, totally. I saw another question go up. Yeah. Brian.
Hey guys, thank you so much. Brian Norris here. Quick question. It's a two-parter actually. So number one, we know that the ad space is a leading indicator of macroeconomic conditions. So there is a huge debate about recession. So first part of the question is, are we in a recession from where you sit? What do you think? And then the second part of the question is, a lot of conversation has been about focused on right now, what's happening in the current marketplace. If we think long term, 12 to 18 months down the road, can you give us some predictions? And I think selfishly, what do you think publishers could be doing to help improve this ad marketplace long term, 12 to 18 months down the road?
Free rein.
Sure, I'll start. Yeah. I may not do this in order, Brian, so if you need to re-ask the question, let me know. I would start out with, you know, looking at the space, you know, are we in a recession? I'm not an economist, like I couldn't say that for sure, but, you know, we still have a lot of demand out there, and, you know, the supply is low. So, you know, based on that, you know, we have the inflation, you know, and we all have felt the impact of inflation in our own personal lives. We do know historically when there's a downturn in the economy, for advertisers who do continue to stay on and have presence, the long-term effect does increase their brand performance over time. So that's something that we talk about with our clients during, you know, times like this. what could you do to help with us, in terms of from the publisher side, just more the data transparency, content, sharing the programming, all of those levers that we've been as buyers familiar with on the linear space, being able to bring that into, the streaming world just allows us to double down in the areas of the genres that we know perform best for our clients, given household incomes that might be really important for them, age, gender, all those components, just that growth of sharing that data will help us all.
Yeah, I mean, Brian, your group has always been great, and I think to what Amie said, transparency and data just helps us do our job. And, I think we're in an environment where, I would consider you and most of the people here business partners with me in the clients that I work with. So, the ability to be nimble and bring as many clients in as possible, test and learn and then scale, really gives us the ability to achieve the goal that we both want. Like, you want to sell your content, and I want our advertisers to grow their business. I think we're both aligned on that, and I think as long as we have that mindset, I think we can be successful together, even in a downturn, because we're way more active than we were in third quarter. I mean, I've seen, I'm not a doom and gloom person, but fourth quarter is surprisingly good. We have retail kicking in early. I know a lot's going to hinge on how well some of these retailers do in fourth quarter. But right now, we want to make sure that we give them the best shot at being successful.
Vicky, how about yourself?
I would agree with what everyone's saying. I don't know if we're in a recession, but I think in terms of what we've seen from brands, there's still a really high demand for consumer goods. There's still high demand in retail. So I think there's a lot of categories that can do really well in this type of environment. Will that change in 2023? I don't know, but in terms of, I think we have all the right tools to be able to navigate that and to be able to bring our brands, into a successful year. Fourth quarter, I think a lot of the plans have kind of already been laid out. Just stay nimble and be ready to kind of make changes if need be. And then for our partners, it's kind of just communicating with us and kind of going along with us as those changes might happen. And just remain flexible, because that's what we're asking our clients to do, and that's what they need to do to navigate this marketplace, right? There might be some supply chain issues or shipping cost increases and whatnot, so we just need to kind of be nimble and stay close to everyone.
And one point that Amie had brought up, and I'd love also your perspective on, Vicky, is this, ask for like more data transparency, and like, is there?
Yes.
And I mean, that's something that Tatari prides itself on as well. So
right.
Maybe to focus on that from Brian's question, is there anything more specific that you'd love to see, whether it's across broadcast or streaming or linear, that you'd like more of that maybe you're not getting today that would be helpful?
Yeah, I think we're always pushing, the boundaries for data specifically in streaming TV. I think we're at a pretty good place with most of our partners. There's a lot of new kind of walled garden publishers coming into the marketplace. So I think as a whole, just pushing those publishers to be more transparent in their data and to really just pass that data over so that people know how it's performing against all these other options that our brands have.
That's great. I think I saw a couple of hands on this side. I don't know if there were any other questions. Great.
Hi there, Ashley Hoskinson from VideoAmp. My question's actually for Amie and Daniel. Daniel, I don't know if that's allowed, you're a moderator,
Please.
But you're on the brand side. So being a measurement partner, I was asking a question kind of selfishly on the heels of Brian's publisher question. What are you guys looking for when you are looking to partner with a performance measurement company relative to potentially struggles you've had in the past with other partners that have been less than ideal? Like what's the dream state partnership for you guys in a performance measurement partner?
Great. Amie, why don't you go first?
Yeah, I mean, overall, I'd say, getting down to that very granular level, it's always worked well for linear television, the time, the date, we can get that information from pixeling, but what is that programming? What is it that a consumer is going in and choosing to, to engage with? So it's always great to know genres, but really knowing the specific programming really helps us because we can add to that. We can add to that portfolio, and then we'll see the performance, in terms of client response data, and how is that response ratio? Is that more engaging, or is it less engaging? And that's how we'll move the levers, and how we'll build out and we'll grow and scale for our clients.
I think if I can build on that, if I can give you a more tactical example to something that we were talking about yesterday of when I think about moving products, why I run ads, once you take out my product cost, so I have my gross profit that's left, essentially I have a decision of like, how much of that do I want to eat up, or how much do I want to affect that by my pricing or my ad spend? So in a very theoretical example, let's say I have a product that I sell and I make 50% gross margin on that product. I'm trying to understand what's the most efficient way to do that, to move it. Is it, do I want to, let's say my break even is 10%. I'm willing to walk away and sell this product for 10% because I have a lot of out of stock or overstocked inventory. I can discount my product by 40% and send an email about it and people will buy it. Or I can not discount it and spend up to 40% of my revenue on that product to try to push it through. And it's really trying to understand, in a very complex marketing mix, how can I understand the incrementality? How can I understand, in the perfect world, I would know to the sense, this ad spend will result in this volume and this drive based on these different channels that we're spending on. And so to get there is obviously quite difficult, and there's some other, in the D2C space, at least for brands that are spending, I would say exclusively on social, you'll see platforms like Triple Whale and Northbeam are the main two that I've seen come up as like the ways to solve attribution. Especially with what's been happening with iOS 14, a lot of people have been running blind. I think one missing part to that in attribution is also feeding the data back. So in the TV perspective, it's a little bit different, obviously, but in more traditional social, the missing link, which now some are trying to solve, is can I not only tell me how my media is performing, but then feed raw or rich information back into the Facebook ecosystem, so they can deliver me better and better targeting over time, which is what we used to have before the iOS 14 changes, now no longer exists. And so if there are ways to take action on the data to improve my outcomes over time, that's really something else that I know all brands are looking for, and there are not as many options today in social, and then on linear and in streaming. I think that's still a lot more opportunity to build on that. Any other question? I thought I saw something else on this side. Otherwise, we have a, yeah? No? Okay. Well, one topic I did want to talk to in terms of the mix, we've talked a little about linear versus streaming. We're also seeing a resurgence because it's this time of the year. We have football, you have the World Series, broadcast or live sports. And I think that's something that we can have a bit of a positive, fun discussion. It's something that I think a lot of brands aspire to be on live sports when they aspire to be on the Super Bowl. We'll see how everyone's Q4 goes, so what the Super Bowl spots are selling for. And yeah, I mean, it's just like an open question of, do you see of your client mix, are there any, can all brands thrive in this, live sports? Is there certain categories that work better? Like what are you seeing is performing well in this live sports environment right now?
Sure, I can take it. Yeah, we've actually seen a lot of opportunities pop up in sports, which is unusual, also more unusual in fourth quarter. Mm-hmm. So, we've been able to really maximize that and pick a lot of those avails up. So that's really helped for a lot of our clients. And, I think it works surprisingly for more than just male brands, right? So we have a lot of brands that are activating on sports in general. Something that's also helped from a publisher standpoint is streaming and OTT being able to target more and provide sports on direct IOs and just more sports in general, because they're making it available on streaming platforms now, so you can buy it, not the same scale maybe as linear, but you can still buy it on streaming, and that's helped a lot with our clients, and it's been pretty successful just as a whole.
Yeah. How about you on your side?
Yeah, I mean, Sports is probably the last, high reach vehicle left in TV. In the fragmented world, you're still delivering a huge audience in real time, live. So that's always exciting, right? And I think as marketers, we always want to make this work. The Super Bowl being probably the biggest.
Yeah.
So these are great opportunities. I still, last year's Super Bowl was massive. I think LA played a role in that, new stadium, and a fantastic Super Bowl. So, I think that those are the events that we strive towards. As they don't work, they're not appropriate for every advertiser.
Yeah.
But when you have the right advertiser and they've done the proper preparation, there's no other bigger way to scale a brand.
Yeah, and I mean, as we're thinking about predictions for next year, as Brian was asking, what how do you think this year's Super Bowl in terms of spend and like pricing and like what kind of, how would a brand even know if I'm ready to, is it worth it for me to spend at this scale? Like how do you advise your clients on whether it's like makes sense for them to do it or not?
Yeah, I mean that's the question, right? First of all, a brand needs to have the capital, right? I mean, regardless of what this year's Super Bowl is, it's still probably it is the highest cost event of the year.
Yeah.
So you need to make sure that you have that in your marketing budget, and that's going to make sense for you. You also need a couple other things, in my opinion. I think you need a creative strategy that makes sense, and really, you need the ability to be able to monetize that over the next 52 weeks. You probably want to use some of the lead-in to help tease it, and then you really need to have a PR strategy, right? And you need to tie all these things together. So it's not that different from the way we handle regular campaigns. It's just on a much bigger scale. So the risk is huge. The reward is huge. So if you have the right brand and the right mindset, and a brand is ready to go to that next level, it's the one time a year you can kind of reach everyone.
Yeah. I guess from a budget planning perspective, I don't know what the spots will cost this year. Let's make up a number. Let's say it's like $8 million for a spot or something like that.
It'll be less than that.
Less than that. Less than that. So it'll be but it's more in terms of like budget planning. I have money for the spot, but then I have to, like, if you were to kind of throw out like a total cost of like how much am I thinking about setting aside as a multiple of this, ad spot spend to be really successful?
Yeah. I mean, you're going to need an equal amount to spend outside of that spot. But I mean, I think last year when we saw Coinbase do that relatively basic ad, I know they didn't spend a lot on the production, right?
Yeah.
But then on the other hand, you have agencies that are going to spend $500,000 on the production, and use it a couple times. So I would err not quite to the Coinbase, but I think that there are ways to make that really effective, and to take that strategy and really you have the ability to create a brand. And that's ultimately, even for performance advertisers, that's what we want. We're all in the measurement space, though. We want to figure out a quantitative way to get there.
Yeah.
And as you mentioned before, it's understanding that mix of media. Like how are we going to allocate it? And the people who do that the best are the winners. And the people who haphazardly spend that amount of money without a great plan probably don't get the return that they want.
I agree with everything that Mike is saying, and it can be really successful. It's a great time of year. It's early in the year. You can set a strategy, but I mean that's key. You have to have a strategy. To go out for just a one-time only placement doesn't really work well. But when you have all the components, you have your communication, your press strategy, all of that working your back end, it can be very successful. But just as a one-time only, typically we don't see that as successful.
Yeah, totally. How about you, Vicky?
Yeah, I would say that the same thing. It's kind of about how can you make the most of the whole entire activation, right, before and also after as well. So maximizing everything even after the airing, right? Programmatic retargeting, making sure you just kind of eke out everything from that spot, and then something important as well is the accompanying spend and all the media around it, and eking out everything that you can from that as well.
And actually to build on we just kind of glossed over this idea, I guess, of like brand and performance, and we're all here talking about performance, but for some advertisers who may be new to the channel, they view TV as brand, and we've kind of like debunked that here as like this is actually quite a performant channel. But in terms of how you think about your creative or your buys, yeah, I would say Super Bowl, even though there's performance tied to it, it's probably like the biggest brand thing you can do. It's the most expensive and the biggest brand thing. In managing your clients, Vicky, you know, what are the data points that you're looking for in their media spend to say, hey, okay, you've kind of tapped out of your performance creative and performance buys, and now it's time to add more spots on brand. Like, how do you think about that planning from a creative and kind of spend strategy?
Yeah, I think, you know, when you look at the Super Bowl, it's not just the way that I would look at it. It's just not one spot, right? It's like everything around it. So, you know, you're paying such a high price for that one spot, so it probably will be branding in the sense that you have to cut through the clutter and make sure that people remember that spot. But everything around it is really important as well, right? So we would view that as a branding spot, but there's going to be performance around it. What do you run beforehand? What do you run afterwards? And mixing that up. And like I said, a lot of the accompanying spend that would come with it too is generally in premium sports as well, right? So you might want to do branding there, but follow it up with a lot of performance media. So we kind of look at it as a hybrid to make the overall activation work.
Even if you weren't thinking about Super Bowl though, like, is there something in terms of like a trend on your incremental ROAS or acquisition costs? Like when do you start seeing it, the tip of, okay, you need to not only do the buy this now kind of DR style creative, assuming that's where people may start, to something that is, you know, more brand focused and less, you know, bottom of funnel focused?
Yeah, it's you know, a little different for every client, but you will start to see, you know, if you're spending consistently week over week, you will start to see maybe your response rates or conversion rates kind of stagnate a little bit. And then from there, if you've been running consistently and you're not really seeing you know, higher traffic or higher conversions or higher response, then that might be a signal for you that, you know, it's time to go into more of a branding media campaign and mix some branding components in there. And then over time, you know, it's not an immediate response, right? So on our dashboard and responses, obviously it's not going to drive an immediate response. You're looking more at delayed responses afterwards. What are your incremental numbers afterwards? So it's definitely more of a long tail type of, you know, metric that you're looking at. You know, maybe like few months of running it, but you're looking at different metrics for that.
Cool. We have a few minutes left, so if there's any other questions from the audience, I'd love to take them before we close off. Your hands, all right. Last call. Well, if you have, you change your mind, please raise your hand and we'll get to you. I think as a parting question, I'd just love to, you know, we're in Q4. There's, you know, probably not a lot you can do. Everyone's buys are baked and you're planning for 2023. So, you know, maybe we can start on this side and go down the line. What advice would you give the group here? We have agency leaders, we have, you know, publishers primarily in the room today. What can they be doing in the last couple of months before the year is up to set themselves up for success and their clients up for success in 2023? I'll start with you, Mike.
I mean, you know, as marketers, we often, and especially, you know, when we talk about digital, we get very concerned about the, you know, the bottom-up performance, right? Looking at things very directly. I think as we, you know, move forward, and, you know, especially we were just talking about the Super Bowl, is, you know, look from the top down and see how these channels have moved the business. So, you know, these are great times for MMMs if clients can, you know, engage in that. It is some work on the client side, but I really think that gives you a really good look at how well you did this year, right? And then it will give you visuals as to what you should do in 23, because we still have enough time for that, right? And, you know, if we're talking about, you know, even the conversation that we just had today with publishers and agencies, I think, you know, there's opportunities, and it's finding that white space for our clients, you know, with the help of the publishers. And I think that will be the difference between, you know, a recession, the way we all understand it, where it's just lagging, or a challenging economic period.
Yeah, great.
I would say, you know, during this time period throughout the rest of the year, you know, as a buyer, really being able to buy more with the investment, increasing that frequency. As we finish out the year for our marketers, you know, we really want to have as much in that upper funnel as we can so that can be worked all the way through lower funnel and then retargeting. So if we can, just continue to widen that base for our advertisers through the end of December to have that marketing to really move into 2023, increasing the frequencies there, which always does help the response ratios. That's what we would look to do with our advertisers right now.
Yeah, I would say the one recommendation that I would make is, if your brand can, to stay on the air, right, and maintain presence. I know it's probably tempting to get off the air and cut marketing budgets, but I would say if a brand can and it makes sense to really stay on the air so that it lays the foundations and they're not completely dark going into 2023. And then in 2023, I think there will be a lot of opportunities, for those that are nimble and to just kind of be ready to move and ready to activate on any opportunities, and really just be ready for any kind of changes.
Amazing. Cool. Well, we want to give you guys a few minutes to transition to the next session, the next meetings, the next things you guys have, and I appreciate you all spending time with us here for a couple of days in San Diego. It's good to see everyone back here, and we'll hope to see you at the next one in San Diego, the next one in Miami, and we have some great content for the rest of the days. Hope you guys stick around. Thank you to our panelists for sharing your wisdom with us, and thank you.
Thank you, Daniel. Thank you to all of you guys. Wonderful job. Great insights. I'm sure that if you have any questions for them, you can come up and chat with them. We will have another session here at 11 o'clock featuring women agency leaders talking about their experiences and the current state of things going on. So we'll see you then.